Joining us now for more on today's inflation is Deputy Treasury Secretary Wally Adeyemo. Secretary Adeyemo, it's great to have you back on the show. Earlier this morning, Brian Deese, the economic advisor to President Biden at the White House, called today's number backward-looking. Do you agree?
Well, Sarah, it's great to be here with you. And I think the way this data works, as you know well, is that it's for the previous month. And since that month, we've seen some of the prices indicators coming down. As Mike indicated in the last segment you had, we've seen oil prices come down slightly, as well as other commodities. And I think the truth is that we want them to come down further, because what we know, as Mike also stated, is this is a global phenomenon, but we need American solutions, which the president has proposed, including giving the Fed the room to do what the Fed needs to do. They have primary responsibility here for dealing with inflation. We're going to do everything we can on supply chains, and also calling on Congress to take steps to reduce our deficits in order to address this challenge head on.
I guess my question on if it is backward looking, as you say, it is last month's data, and we've seen oil prices come down since then. We've seen other commodities prices come down since then. Should the Fed really pay too close attention to this report? Should it go even stronger on hiking rates, as the market is now expecting them to do, and potentially crush our economy into recession if we're starting to see evidence that inflation is thawing?
So, Sarah, I'm not going to talk about what the Fed should do, but what I'm going to say is that what the president has said, that prices remain too high in the United States of America, and that's why we've got to do everything we can to bring them down. And as you know well, it's not an American phenomenon at all. It's a global phenomenon, and that's why we want to give the Fed the room to do what they're going to do. But it's not only something that the Fed can take action on, even though they have primary responsibility. We've got to take steps to deal with the supply issues in our economy as well. That's why the president released a historic amount of money from the Strategic Petroleum Reserve. That's why Secretary Yellen today is in Asia working to implement the price cap, which would allow Russian energy to flow but reduce the amount of money that they make from it. And that's why the president's calling on Congress to approve a package that reduces our deficit and helps to bring down pressure on the economy and on high prices.
Well, how does that price cap really work? I know Secretary Yellen is trying to sell that overseas to try to hurt Russia. Don't China and India have to be on board with that as buyers of Russian oil?
So, Sarah, the basic thing that China and India and other economies need to be on board with is paying as little as possible for Russian energy. And that's what we're seeing happen today. What we know in the marketplace is that Russian energy, or Urals as they're called, is being sold at a massive discount to those who are buying them. What Secretary Yellen is advocating for is making sure that Russia is not able to benefit from the risk premium they've introduced into the market by reducing the amount of revenue they make while allowing their Russian oil to flow. And we think that countries that buy that oil should be very interested in this, because it reduces the cost of energy for each one of them.
What ultimately does the White House hope to accomplish here? Because we've seen also, I know you've been working on sanctions packages. They've been extreme, and yet still, you know, the ruble has come back. The Russian economy, it's obviously taken a huge hit, but we really haven't seen a let up in this war.
So, Sarah, our goal remains the same. We want to reduce Russia's revenue while mitigating the risk to our economies, and we want to reduce that revenue so they have less money to prop up their economy and to also pay for their war machine, which is conducting this unjustifiable war in Ukraine. The next step is implementing the price cap. We know that today Russia earns the vast majority of their revenues from selling oil around the world. We want to allow that oil to flow because we want to see oil prices come down so that our consumers pay less. But we also want to reduce the amount of revenue that Russia earns from selling that oil in order to make sure they have less money to prop up their economy. Accomplishing that will put them in a position where they have to make stark choices about propping up their economy or continuing to pay for their war in Ukraine.
So, Mr. Secretary, now that we have another hot read on inflation, we're set to get a negative print, at least if you trust the Atlanta Fed GDP model on growth. So negative growth and sky-high inflation. How much are you guys talking and worried about stagflation at the Treasury?
So, Sarah, I'm not worried about it because I spend my time talking to CEOs and small business owners, and what they tell me is that demand for their services and goods remains strong. Last month, you saw that we closed the gap in terms of the number of jobs that were lost in the private sector from the COVID crisis, and now we've created more jobs since President Biden has been in office than have been created in a number of years, in over 40 years, and the economy has continued to grow. Industrial production is still strong. So underlying, we see momentum in the American economy, and that momentum is going to carry us forward. And I think it puts us in a stronger position than any economy around the world to deal with the high inflation that we face today. You look at inflation prints in other parts of the world, they're also high, but they don't start out from the place that we start out from, which is a place of strength. Our goal is to make sure that we take steps to keep playing upon that strength to make sure the economy continues to grow and we continue to create good paying jobs.